Hey Scott, thank you. Jamie, how are you, my friend?
I'm good. I'm good. Happy Thursday.
Ah, yes, Thursday. Yeah, just one more day to go. But we do have a webinar to get through and some interesting stuff to show you, man. I got a nice little optimization of an A window that I shared with you probably about a couple of months ago. So we'll dive into that. But first, let's dive into the disclaimer. Okay. Guys, remember, you're going to hear a lot of things here, talking about charts and setups. Just remember that anything that you hear should not be construed as investment advice, all right? If that's what you're looking for, you need to look for a broker, a registered advisor, somebody who holds that license. So uh, now that we got that out of the way, let's talk about the good stuff. And bear with us, the regulars on here. There is always a treat for you down the way, but we have to talk to the people who are in here for maybe for the first time and thinking about getting this very powerful software, but are maybe a little intimidated by it. So we want you to know that you're not alone with trade ideas. Okay, we have excellent training and mentoring and education and support. So it starts in the trader's room. I'm sure most of you have been in there. If you haven't, you need to get in there. It's free to everyone. It's moderated by our good pal Barry, who does an excellent job of not only trading but also navigating through the software and showing you how he uses it to profit in the marketplace. Uh, Throughout the week, every day, Monday through Thursday, in the 5 Eastern time slot, we have a webinar, much like the one you're in here right now. We have one on Monday called Office Hours with Jamie and Steve. On Tuesday, that one's not up there, but it's our Trade of the Week webinar, and that's myself and Steve. Steve is the host on that one. And we have our Q&A demo with our CEO, Dan Merkin, and our CTO, Brad Williams. And of course, today we have the trading room with myself and my good friend Jamie. And then Friday session, we throw in a support session because for those who are new with the software, it's a great place to come at the end of the week, laid back, come in, ask your questions. We're there to help you. You'll have a visual just like you do today, so we can pretty much field any question that you have about the software. And you know, that's scheduled for 3 hours every Friday, starting at 11 Eastern time. And then let's just go on to the next slide, and I'll talk about this TI University. We are getting great replies, great responses to this. People are loving it. They're spending 6 hours a week, and it's broken down into basically an hour and a half each day, Monday through Thursday. And it's kind of a graduating class system. You go to beginner 101. Then you come in for Tuesday for 201 and so forth all the way down. And Jamie had the 401. He hosted that today. And I can guarantee you by the end of those 4 classes there, and it's fun, and you're learning a really cool software. So it's not like a normal university. It's a fun university. Matter of fact, we should call it TI Fun University. But we go through everything, guys. So and then if that's not enough, you can still turn around and come on Friday if you have any more questions. So guys, plenty of material, plenty of help here, support. We're here to help you because we know it's a powerful software, but we also know it's very intuitive. And once you figure out how to use it, you'll find that out on your own. All right, one last thing here before we move on to the agenda for today. We do have a Brokerage Plus product that's still in its beta phase. What this is, if you are kind of not necessarily new to trading, if you've been doing it for a while and you can write some really good strategies and you want to automate those trades from your strategy, you can do that with our Brokerage Plus product. Okay, this works with Interactive Broker. And if you want more information about that, just go to trade-ideas.com/beta. All right, the agenda for today, it's not too much stuff on it. Of course, this above all major SMA optimize is probably going to take some time. And we're probably going to spend some time on Holly recap since we're all still trying to digest this new, Holly different segments and how to best utilize them and And we're still learning with you guys. All right. I know if you've gone into the Wednesday webinars, which is a great place to get, you know, you know, the new information about the bells and whistles that just came out, because those are the guys that kind of sit in a dark corner and create all this stuff. But Jamie is also, you know, he can help you with a lot of that. He's here today, so he can kind of go over it, and of course I can tell you what I've learned so far. But let me back out of this and let's just dive into the market recap now. And while I'm doing that, let me also get me a drink of coffee here. Excuse me. Jamie still got the, you know, the allergy is still pretty strong here, so I gotta take you a swig every now and then or something.
I know, exactly. They're still with me, and I'm not even there anymore.
I know, man. All right, so let's talk about the market, and then we'll dive into Holly. A lot to dive into on Holly lately, so let's just talk about the spiders. Once again, guys, I like to refer to the spiders as my kind of mirror of the overall market, because it's such a good reflection of the overall market, because it does comprise of 500 stocks that are a lot more equally weight than what you're going to find in the Qs, and of course only 30 of the diamonds. You know, today we opened up, and once again we kind of get this little scare every morning, you know, where the market starts to sell off. The Qs were the ones leading the way down this morning. If you, I can remember talking to the guys in our Slack, you know, pretty early, saying looks like there's some profit taking going on in the Qs, and then it had another leg down. So they were at one time down pretty good. They did bounce back to their, you know, less than 1% down, but that and IWM. If you look at IWM, they were also, you know, kind of leading the way down. The spiders was probably holding up the best, and the reason so is because if you look at the sector watch list down here, you're going to see the OIHs were doing very well, and of course, most of those stocks you're going to find in almost all of them you're going to find in the spiders. So that sector, energy, was doing well today. And all right, so let's go back to the spiders, and I'm not going to spend a whole lot of time on it because we've been seeing this for a few days now. It's just kind of a grind higher. We threatened today, but nice little tail there in the spiders, moving up to a very critical, you know, level. Yeah, the Qs and the IWMs, they got through their levels. Now the spiders, I think if they can get through this, we may be looking, you know, eventually at a you know, another all-time high in the spiders. To my surprise, let me see, I'm seeing questions here. Okay, yeah, we'll get to your questions here in just a minute, guys. Just bear with us, and while we cruise through this. But anyway, you know, like Steve drew up yesterday or Tuesday, and probably talked about yesterday, we did break out of that level here in the spiders, and now we are, you know, that's the next level of resistance. Not a whole lot else there. Looks like, you know, the chances are it's going to make it up and test that level. We'll see what happens. But you know, the Qs and the IWM, they're already through. Although Qs came back today and kind of fell back below. Bulls really don't want to see that, but nothing that really I would, you know, be too concerned about. XLF is actually getting a bounce too. You know, some of the big banks, they were looking pretty dire, even as the market, some of the other sectors were hitting all-time highs. These, you know, it was looking pretty dire. So I still think you have to keep an eye out on the major banks, especially if you see the ones over in Europe, the Deutsche Bank and you know, Credit Suisse rolling back over, which that looks like it could. And of course, EWI and EWJ, you know, some or EW, is it J or B? EWB, Brazil? What's Brazil? I can't remember. Oh, well.
That's a good question.
Don't worry about it.
Looking at it.
Yeah, don't worry about it. Anyway, keep your, you know, any of that bond risk over in other countries, you know, keep an eye on that, because that's the only thing I think that the economy seems to be doing well. That doesn't necessarily mean the stock market has to do well, but it helps in many cases. So keep an eye on any sort of contagion that may happen out there. And yeah, everything is setting up like I agree with Sean, to the long side, and I probably will lose my little bet here that the spiders will see. My bet was that we're going to take out the February low before they take out the January high. Not looking good for me right now, but I'm not giving up that easy. All right, Jamie, I'll give my 2 cents real quick on Holly. First of all, guys, it's, look at the action of the day in the spider, okay? I don't care what tool you're using, even if you're using your own intuition and your own expertise of chart reading and reading alerts, which some of you are really very good at, I know. This can be a tough day for follow through in any direction. So when you get price action like this, and we've had, we had some days over about a 2-week frame right here where we were getting this every day. Finally had about 3 days worth of some nice trend, and now, some more slop today. We'll see what happens after this. But the point I was making at, as good as Holly is, she's not a golden goose. And, anytime you get action like this is why we say it's man versus machine. All right. Don't just feel like you're going to come out here every day and Holly's going to act like she's done the last 2 days, because, it's still a market. Holly is still subject to the market. A good setup may happen, and then all of a sudden, say for example right here, you're watching the spiders, you get a good setup here, and then all of a sudden strategy sets up here and everything lines up and she fires off along, and then boom, you get that. Hey, this is why a man has to take over, okay? These are ideas. They've historically been very good ideas, but they're still ideas, and every day the market is dynamic and every day is going to be different. So you always have to keep the backdrop up of the overall market. Just remember that, this is not a, like I said, a silver bullet, golden goose. But that being said, Jamie, I'm sure you will enlighten us even more. I know there were some good trades out there. Before you talk about one, I'll just say this one right off the bat. When I saw that one here, that was just that was just a chart. Just you had a move and then a nice little long 3-week cup like that, and then breaking out of it. Holly caught it right there as it was breaking through this 2-3 week high. When you see things like that, it's just very powerful. It's a very, very powerful chart, and you can see risk on up to through 232 today. So, Jamie, I'll let you talk about some more if you want to take over the reins there.
Yeah, no problem. Let me grab the reins. And the thing with Holly is there's just a whole lot more Holly now.
Yeah, that's right.
A whole lot more. So there's going to be a lot more opportunity, of course, on a day like today. Nothing, as you were saying, nothing's immune to the whims of the market. No system is going to win every day. It's typically the monthly net / gross that we're interested in which case Holly's doing quite well. But today was just one of those days where we had a lot of high volume selling, especially in that opening 15 minutes. To what the compare accounts that I watch were showing me today. So, seeing the market peel off a little bit, especially from where we've been, it just kind of seems like normal, right? And of course, we did have a little bitty gap up. And of course, after this energy expenditure, red day, but not a very scary red day. But nonetheless, if you're trying to go long all day, you were facing some serious headwinds. And even the shorts, weren't a guarantee today. Nothing's ever a guarantee, but a lot of the times the shorts have worked better. Not today, because predominantly when the AI is doing its analysis, what's it seeing? Up, 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 up. Not quite away yet, but couple more days, maybe by the end of the week. Who knows how long we're going to bounce around in this range? But there was a user asking, is this the sign of since we topped out on the Qs, back over here again, is that a sign that we're going to be reverting to a bear market? And, you know, I just simply made the comment that you can see in there. Well, all the technicians that I give ample respect to, you know, they've been saying the same thing for a while now. It's just like, you know, you've got your CNBC commentators and you've got all these people that are bears, but the charts, you know, the market, the charts are telling us something completely different. So I'm more on the side of the fence that, you know, we probably will pop new highs in the not too distant future. Of course, I could be wrong, right? But getting back to Holly, you know, this downdraft today, you know, didn't fare too well for a lot of the longs or the shorts. But what I'd like to point out with Holly, since we do have 3 different versions now, is in the beta version, you'll notice in the strategies panel right here, this is the one that we're currently on, and this is the trade tally, right? And of course, we can see risk off here and risk on. So risk off down 28 cents, and this is the first Holly, the original Holly. Risk off down 28 cents, risk on up 73 cents. Now I went ahead and took the liberty of clicking through each one of these guys. And by the way, since this is a relatively new feature, this is how you flip back and forth between the 3 versions of Holly, other than clicking on your channel bar up here, where we can do that as well. But if we right click and just come down here to segments, I'll click over to Holly 2.0. You're going to see everything adjust here in a moment. Once again, risk on red, risk off red, and then last but not least, and kind of the one that I've been paying more attention to, is the Neo version of Holly. And of course, risk off plus 30 cents, risk on up 40 cents. So if you take all 3, the tallies for all 3 combined today, as far as risk on goes, plus 29 cents on a bunch of trades. So we could really just basically call that flat, right? Holly made a bunch of trades, traded water as far as risk on goes. If we tally up all the risk offs, the 3 combined on the tally of trades are down 64 cents. So taking a lot of risk, you were plus 29 cents. Playing by the book, you're down 64 cents. All in all, not that bad of a pullback or a losing day for the AI. It was just basically treading water for most of the day. Now, having said that, I'm gonna pop back over to the original Holly. And by the way, we got shown a little sneak peek of some metrics that are coming up that's going to make this easier to maintain. In the future, we're going to have a nice shiny GUI that should display everything very elegantly and efficiently. But in the meantime, we're going to have little, in a patch that's coming soon, we're going to have totals up here. Now, I can't remember if that was going to be risk off or risk on, Andy. But in the meantime, before the really good stuff comes out, we're going to have totals up here represented in the channel bar. So you can quickly look and see what all of them are either up or down. I think it's going to be risk on at first, but that's coming down the pipe soon enough, because it is a bit cumbersome to have to switch back and forth between these guys manually, and you can't have multiple AI strategies up or strategy panels up right now. Hopefully in the future that will also be a possibility.
Yeah, the worst, Jamie, is waiting for that first trade of the day. I'm sitting there toggling it over and over, you know, for the first.
Oh, I know. I'm like, which one's going to fire first?
I know.
Fire first?
Well, it'll be easy. You'll be able to look up in the channel bar, and once you see a P&L on one of them, you'll know that a trade has been made. And real quickly, Jamie, I know Christopher was asking about Neo, and I believe I did hear where that one puts on a little bit more risk. Do you have any parameters? Are we still kind of waiting?
Let's talk about that and a couple of other things. Number one, everybody's going to notice you might see the same strategy in another version, but keep in mind you're probably going to see different win percentages here because the core of that strategy is the same, but that respective AI has tweaked it a little bit differently than the other, right? So every once in a while you'll get duplicate symbols generated, but it's been pretty good about all different sets of symbols. Now, as far as the characteristics between Holly, Grail 2.0, and Neo, there's been a lot of hullabaloo about Neo because not only across all the bots, you might see strategies that you've never seen before, and that's because we're adding new strategies. There's going to be some new ones added probably in the next week or so. But Neo, from what I've been told the profit save and the reduced risk are a little bit more liberal, so to speak. In other words, originally, just to refresh everybody's memory, we had a profit target, a stop loss, and a timed hold. And then we quickly added profit save and reduced risk, so the AI would not let a winner turn into a loser, which gives her the ability to either cut out of a winner earlier than the hold time, or shave a loser off before the hold time or the stop loss gets hit as well. And that works around a time decay mechanism. The longer the trade is open and it's not making progress, then the shorter the clock where Holly can go, whoop, I'm pulling the plug on this one. So on the Neo version, that profit save and reduce risk, from the way I perceive it, has been loosened up a bit. Now, how much looser is it? I don't know for sure. But from what we've noticed thus far, Holly Neo tends to stay in trades a little bit longer and not see as many occurrences of the profit save and reduce risk. So I hope that makes sense. Now, of course, there have not been any documents produced regarding that, and no specifics released. As we get more specific information, we'll gladly pass it along to you guys. All right, so going back to my prior comment, there's just a lot more Holly, and the process that we go about during these sessions is pretty much the same. There's just going to be a lot more examples, right? So first and foremost, let's talk a little bit about risk on, risk off, and of course, if there are any new people out there, you might be wondering, well, what do I pick? Do I pick risk on or risk off before the day starts? And this is really just for informational purposes. It's meant to show you, hey, this is a highly sophisticated statistical model, and this is how it's doing today, so that we can temper our actions, right? And we can also learn from this thing as we watch it and watch it and watch it every session. So, as far as what we see up here, this is just showing you, hey, if you held everything all day, at the end of the day, you'll be up 73 cents. Playing by her 5 exit criterias here, she was down 28 cents. But it's best to address risk on, risk off from a trade by trade basis. So let's take a look at this one here, CEQP. And here we are looking at the 15-minute intraday charts. And we can see right here is where Holly called the buy, corresponding with the blue line. We got the stop loss down here. And on this one, I don't know if we had a, let's look at the daily here. Well, I can't even see the profit target up here, but it didn't get hit anyway. But look how beautiful that trade was. Draw a line right here. Not only did it have statistical weight behind it, but man, if you pulled this up and saw this in real time, you're also noticing that it's a nice little range break. It's popping up above that previous high. Of course, after that, what do? We go sideways a little bit more. We get 1, 2, about 3, 4 more passes in and out of that signal line, which is not uncommon. And we got this nice little consolidation after that, and then boom, off to the races. Now, notice the darkly shaded area here, which is Holly's time in the trade risk off. We can see right here, she got antsy. Going back to that definition that I was telling you guys about, if the trade is not making progress, in other words, it's not going up and time is passing, right? 15, 30, 45 minutes have passed and the stock's not doing anything. So Holly, who's not the best at getting out of trades, remember, her strong suit, her superpower is the statistical analysis and bringing us these statistically weighted entries. A lot of the times, as Andy was talking about earlier, man with machine is the best way to operate right now. It would be nice if we could just turn it on and come back and count the ching at the end of the day, see how much shiny coins we had. Idealistically, that's great, but we don't live in an idealistic world. More importantly, the market is not idealistic. So here we see Holly exiting the trade, but has it even flirted with our stop loss yet? It's going sideways, it's not going up. So we can make the decision to stay in the trade. In other words, we're deciding to go risk on. And if we do that, what do we want to do? We typically have to make a decision depending on your, how you like to operate. Stick to your original hard stop or just at slightly below break even. If you're doing the most practical way to get used to risk on and risk off, which in my opinion is to do a little bit of both until you get really comfortable. Later on, after you get comfortable, you might go, I'm going risk on the whole lot. But in the meantime, let's say we were in 200 shares with Holly and we see, well, she's bailing, taking a 5-cent loss there. Well, nothing's really scary on this chart here. It's just kind of meandering around sideways. I'm looking down here at the volume. It's still doing tons of volume. I mean, the thing finished at 4.75 on the relative scale. Oh, by the way, let's take a little look at the daily. Well, what's going on over here? All right, there we go. Okay. Boy, this one went back a lot further than I thought. So we're starting to, we're well above that little channel there, getting up into this area back here. So it might have some room as well. But the bottom line is it's still nice and snugly here. So if we feel compelled to do so, we take a nickel loss with Holly, keep the other half, remain with our original stop, and guess what? We end up getting paid. So the name of the game here, whereas spreads, the word spread, when I'm talking, used to just be about the difference between the bid and the offer on the stock. Well, now every day we have a different type of spread to analyze and try to get a little piece of here, and that's the spread between risk off and risk on. So 90 cents of spread in here, actually $1 because that's negative, right? So if we would have stayed in the trade based on the intraday chart and or the daily telling us that things looked all nice and snugly, we could have, did a little bit with Holly, kept the other half. So we lost the nickel, but then we made hopefully 50, 60, 70, 80 cents, back a nickel out of that, and that's your net, right? We've got something very similar here, but on a short sell, right? Holly calls a nice little short right here in BYD. She gets a nice push down and then a bounce back. What does she do? Oh, she gets a little nervous. Says profit save, but really she flatted the trade on this bounce back up here, right? So typically if we're in a trade, I mean, the things really got to start, they really have to shake the tree. And when they shake the tree, typically your stop loss gets violated, right? Well, been in a trade a million times where you're in the money a little bit, takes a little pullback, gets a lot of people out because they're like, I'm going to flat it. I'm not going to lose money on this trade. But look, never even came close to our stop. We get that second push, and it was a good trade, right? Holly was just bad on her timing on the exit. Once again, no surprise, not her strong suit, right? We take a little bit with Holly, say we flatted half, stuck to our original stop loss. We could have collected some of this spread between 0 and 48 cents. Even if you make an extra dime, an extra 15 cents over a large amount of trades over a month, 6 months, and a year, that can literally mean the difference between did you make money or did you lose money in a year, right? Those pennies add up quick over time, especially dependent upon your commission schedule. So Andy, anything to add on these trades here? We'll take a look at one of the other ones as well here, just to get a little variety.
Yeah, I mean, well, where else do you find stocks like CEQP? If you don't have, a software, I mean, it's just, I would have never known that had it existed if it wasn't for, trade ideas. But
right. And keeping in mind that the market was doing this most of the day, right? Mm-hmm. And, hey, we talk to so many traders out there, Andy. There are people that still, they don't short sell. They only go long, right? Mm-hmm. Now, of course, today was a good testament, on a day like today where it was a little bit of a range-bound sell-off. Yeah. But, when the market does turn, it's not going to be real easy to find stocks that are going up against that market, which is why it's always a good idea for everybody to download that ebook that we published. To get ready for that. So let's just switch over to a different AI. Let's go over here to Neo. and see what kind of risk on opportunity presented itself here. Now, here we have one JP, and we can see right here, see my other arrow didn't show up, it's kind of strange. Holly calls the long right here. Once again, that sideways action, and that one stood the test of the timed exit here. And of course, we can always look at the strategy float on, come up here and locate that hold time. You can see all the strategy's hold times right here, 60 minutes. So did stay in the trade and did what she was programmed to do, but this looks, you know, just like the others. We could have easily peeled out a half with this one, kept the other half, whether we used break even or stuck to our hard stop. We were able to get a little bit more out of that trade. Worst case scenario, it peels back on you and stops you out. You still made money on the first lot. And let's see here.
Can you teach Holly to re-enter after she sold?
That's a good question.
Yeah, we probably could.
Well, it's not so much a teaching of her to do that, but in the future, when these strategies you'll be able to automate them, it's more of a programmatic command. In other words, imagine once you load the strategy up in Brokerage Plus and you're setting up those trade instructions, you can have each strategy and say, how many attempts per symbol in this strategy? And you're like, well, I know that on some days the stop barely gets hit and then they turn and burn and you know, go up a point. So you could say, I'll take 2 attempts through the entry line per strategy per symbol. That is functionality that will exist in the future. So that addresses the question there, John. So it's not teaching Holly to do it, it's just basically making those options available in the strategy setup software. So hopefully that makes sense, John. Other than that, let's see, let's pop back over and just take a look at the only one we haven't looked at. This is the one that had the hardest time today. But this is where Andy's here came from, right? And this is just another great example of staying in. And, well, I take that back, Andy. That's a tight, tight stop for that little guy right there.
Yeah, it is.
And, you know, yeah, if we would have played that game, the 50-50 game with this one, if we would have used our hard stop, we would have got stopped out of that second one. But as Andy was indicating earlier, you know, once you see a setup like this, well then, you know, what do my eyes go to immediately? Well, when it pops again, it might have a little juice in it, right? Rides that stop loss area the whole time because the market was a little uncertain. I can tell you one thing, if on a stock like this and a pattern like this, if we hadn't had a down market, we probably wouldn't have seen hardly any occurrences popping through these levels right here. And then, of course, the volume came into it at the end of the day. That's another thing that I noticed today is that a lot of the upside plays where that volume is typically big and juicy, it was just barely above normal on a lot of these plays today. And, of course, looking at the indices over here for the ETF, tracking ETFs, you know, some decent volume to the downside, which that's been par for the course. Bigger volume on the downside and lighter volume on the upside, but that's nothing new in the market. All right, Andy, so I don't want to eat up all the time here. So
that's good stuff, yeah.
Pass it back over to you and let you tell everybody what you spent some time on today. Hold on a second. There you go.
All right. All right, guys. So, yeah, I think thanks. A window. All right. If it's an A window, remember it has to have an event, which is an alert. And in this case, let's just kind of dissect it and dive into it and see what we have here. The name of the alert is above all SMAs, so that should give you a hint of what what the premise is. So the alert is simply a new high, and the filters are price has to be over $5. The change from the 50-day SMA, that needs to be 0.01% above it. So, and you can see the average daily volume is 300,000. Volume in the 5 minute has to be doing 200%, which is basically 2 times normal in the 5 minute time frame as it's hitting a new high. And the rest of them is just change from SMA. I want to see them everything above any major SMA, like a 200, a 20. I was a little more liberal on the 8 just because an 8 is such a strong, it's such a fast line. So I could be a little bit below that one. Position in 20-day range, position in previous days range, 99%. Position in year range, 75%. So this, I wanted to back test it to see how it worked. I mean, I knew it probably wasn't going to back test very well, but I still wanted to take a look at it. All right, so hopefully my back tester is working properly here. I mean, fast. So let's go in and we're going to back test this on a swing trade, meaning that we're going to hold the trade for longer than a day. All right, so back test strategies, and I'll just kind of take you through the module real quick. Wide open as we run it the first time. In other words, I want to catch every alert that came through from the start of the market. I'm on Central Time until the market closes. Timed exit. I'm going to hold this trade and close out on the market open tomorrow plus 3 days. So it's a 3 days hold, a little extra if you're counting the day. Risk management. Okay, it's a percentage, and I'm giving myself a 3% downside. Since this is, I would never do something like this if it was a day trade for this alert, but since it's a 3+ day hold, I'm going to give myself 3% to the downside, hoping to make 5 or 6, 7, 10, whatever to the upside. I don't have a profit target set on this. I find that in most cases it's best just to run the full time. Advanced. Okay, I'm going to run it the full 64 days. Summary. All right, let's run this bad boy, and hopefully it does it pretty quick here. Off to a good start. So for those people who are new in here and don't know what they're looking at, okay, our system, okay, our back tester is going through every single trade that came, and you can see it's like up to 3,000 now. That came through this alert over the last 64 trading days, which is basically 3 calendar months. So it's going through and back testing every single alert that came through. And of course, it kind of gets hung up here in the last couple of percent complete. Okay, so there you have it. We have a profit factor of 0.94. A profit factor, what that means is basically taking your total profits and divided by your total losses. So this is almost even Steven, all right? This is almost, in other words, if you had 100,000 in profits and had 100,000 in losses, it's basically, it would be 1. So in this case, we almost have 3,000 trades and only 42% winners. Not bad. I mean, it's not all that great. You can see the average winner is $1.95 and the average loser is $1.55. So this is not bad. You can kind of see the histogram there on the thing and its profits, but I think we can do a lot better. Now, I spent about an hour, because here's what happens, guys, when I do my optimization. Okay, you can go in here and optimize this based upon price. Let's put this down to $10. You can optimize based on time of day. Cut this back to 30 minutes. And you can see already right here, wow, the majority of them, they do better in the morning than they do in the afternoon. You can optimize on all of our different filters. The problem is when I'm doing my optimization, when I'm going in here, sometimes I may spend a couple of hours on this thing, and I may dive in and out of different scenarios, kind of like Holly does, but nothing like the scale that Holly does it on. So in other words, it's hard for me to, once I got a really good back test, for me to go back and do it again, because I've done so many different scenarios that I can't remember the steps that I took. So it's hard for me to go back and optimize this right now with you guys. I wouldn't have the time. I only got about 10 minutes left. So I'm going to show you what I did. I'm going to show you the results, or I'm going to let's put this back on summary. All right, now this is the optimized version. Okay, above, I called it above all major SMA swings. That one's hiding right there. Let's put it right there. And let's just take a look at the module, make sure everything's pretty much the same. Backtest strategy. Okay, you can see right now, I've already optimized the time in this one, for an hour and 15 minutes, the first hour and 15 minutes of the day. The timed exit, same. Risk management, 3%, same. Advanced, yep, running the full gauntlet there at 64 days. So let's go ahead and backtest. I'm kind of going to do it first for you and show you the incredible difference. And then we're going to go and look at the difference between the configurations. So we're kind of working backwards here, but that's okay. It'll still work. All right, so this is the optimized version. It's going to run quicker because we have less time. We're only doing the first hour and 15 minutes of the day. So look at that incredible difference between these two strategies. So the reason I wanted to show you this, guys, it's easy to get frustrated when you see something like this. Oh man, profit factor, this is no way, and just not even optimize it. But when you have this many trades, you can really go in and do some serious optimization. Now let's see what I've done. And we still have 584 trades here. So this is one that could be very interesting to kind of keep an eye on for swing trading. So let's take a look. And then what I had to do was actually create a Word doc, and I hope you guys can see that. So what I'm going to do here is take the one that we did first, and we're going to open that configuration up. Because unfortunately, you cannot open up two configuration windows simultaneously. So here's what I'm going to do. I'm going to put this right here, hide unused, and then I'm going to bring my doc over, and we will kind of compare the two. And I think you should be able to make that out. Put them closer together here. So EPS, both of them have an EPS filter in it. You can see here my price on this one was $5. My price on this one, I capped it out at 200, okay? So that was an optimization of price. You've already seen the optimization of time. This was my optimization of price. This is the key one I want to show you guys. You can see here change in S&P change today percentage. I don't have anything over here. I don't think. No, I don't. Okay. Play around with this filter, guys. I've found a lot. This could be very powerful filter, and it's great for optimizing. And amazingly, this is a long strategy, and you would think with a long strategy, it would optimize best if the S&Ps were up on the day. But quite the contrary. It optimizes best when the market is down. And the reason that's happening is, guys, let me explain to you what's happening here. If you just think about when you're creating these things, all right, these stocks are all holding up very well, okay? They're above all their major SMAs. They're above, their 20-day high. They're in the upper 20-day range. In other words, they look very strong on a chart. So a lot of times when you have the market, going down and the market selling off, these stocks hold up very well. And then what happens is when you do get a bounce in the market, which we get a lot lately, you see it, 3 to 4 days out of a trading week, the market will try to sell off, find a point, and the buyers will step in. All right, so what's happening here, as the market's down, these trades, these stocks that are strong when the market's down, just imagine they're going to get stronger as the market, as the market gets stronger. So that's why this is working so well, this change in the S&P. So that keep that in mind. Play around with that filter when you're optimizing your alerts. Of course, there's no difference here in the change. Market cap, this is another one. I added a market cap in this one. We know the stock has to be trading more than 300,000 shares. I got that in both of these. So we know it has to average more than 300,000 shares a day. But I noticed putting a market cap in here of 1.4 billion that, hey, it optimized pretty good. And you can always take this, guys, I'll share both of these with you, and you can play around with it and see, plug these numbers in and go into the optimization and take a look at them. This is the same, this is the same, that's the same. Volume in the 5 minute. You notice I had 200 over here? Well, I said to myself, well, you know what, I'm gonna put in not use a volume filter and optimize it. And that's what I did here. So I took out my volume filter, and then when I ran it, then I optimized it based upon the 5 minute volume. And all it really had to be is a minimum of 100. Position and year range, I don't think, let me take a look at this one again. I don't think I have one in that one. Let's take a look at the configuration now real quick. Okay, I don't have it in there, but I can tell you by the looks of all these moving averages and the way the stock has to be above them, more than likely most of these are going to be in the upper 25% of their 50-day range. But anyway, this is a good number. This is a really good. Let me close that out. So this is a very good number right here, and let me kind of break this down for more. Okay, so a profit factor of 2.51. Okay, now you're talking about some serious profits over your losses. 60% winner in 584 trades. Now, what's going to frustrate you if you're running this looking for trades when the market's up? See, you can see nothing really came through here today. Let's go and put it on today. You got nothing because it did not meet the S&P 500 criteria. Okay, so that's when it's come. This is when this is going to be useful, is when the market is down at least what is it, 0.36%. You'll get some stuff firing through here. Now, I think the market may have been briefly down here, but then we had no stocks that were hitting highs during that time. So, but anyway, we could just go put it on all and see some stuff coming through here, I hope. And we'll see when the last one came through. We've been kind of in a strong market, so you can see the last one was about a week ago. All right, so it can be frustrating looking at this, but when you do see stuff coming through based upon this optimization, it could be a very good trade. So once again, this is done for swing trading. If you want to take it and see if you can try to work something out for a day trade, that's up to you. And like I said, I will share this. But the main point I wanted to drive home here, guys, is I have been using that S&P 500 filter a lot. Thank you, Mike. I appreciate that. I've been using that a lot. So those market filters can be very, like I said, very powerful when you're doing your optimizing and back testing. So take a look at that. All right, so let me do this. Let me put this back on real time, and I'm going to drop this into the window there. I tell you what, I'll go ahead in case. You know what? No, I don't think you can find that in there. So I'm going to go ahead and drop them both in there. Let me get these out of the way. I mean, you can still find some good trades on this, and you just have to be more selective. You can tell by the back testing. So first, I'll drop in there just above all SMAs. And this is going to be the one that's not optimized. And if you go to your chat window and your GoToWebinar interface, that's where you can find this, guys. And now I'm going to put above all SMAs, above all SMA swing. This is the one that is optimized. And for those of you guys who are new in here, basically what I'm doing, I'm just sharing this same configuration. I'm sharing these windows with the people who have a subscription, so they can just take this now and pull it up and have it on their software. Very powerful technology, and it's great for like sharing ideas, because now the people who are attending this are getting this optimized above all major SMAs, and they can put it to use immediately tomorrow in their software. So incredibly intuitive when it comes to sharing cloud links, we call them. All right, guys, that is going to wrap it up for today. Uh, I will take I will take a couple if there's anybody out there that has any charts they want to look at. We have time for we've got about 3 minutes left to take a look at any charts. If you guys have a stock you want us to look at and maybe do a quick analysis on you, you're welcome, Mike. We'll be happy to do that for you. Okay, TNDM. All right, very, very strong daily pattern. Yes, this is a very strong pattern. I am always leery, and look at there, Jamie, a couple of buy signals. I'm not sure. This may be on the Holly hot list. I don't know. That what this means, guys, is Holly called this out. Okay, and this is why we say, guys, that you can take ideas from Holly and use them on a longer term time frame. This is where your expertise comes at looking at a chart and you see charts that are breaking out and 6, 7, 8 month highs, and boy, just setting up again and again and again. This one looks great, Artem. I'm always a little bit shy when I see a stock over a couple of months go from a $5 stock to a $15 stock, but we all know that doesn't have to stop. It can just keep going. I don't know if you're already in this or you're looking at it. I mean, another break above this level, you see about 3 wicks up here. So if you do get a break above that high, it could be, off to some more. And look at the short float, 37%. So you could have another squeeze above that level. I wouldn't get in it just to get in it at this point because it does seem like it's running out of gas up here. But boy, above that level, the squeeze could be on again. And I'm always careful on pullbacks because a lot of these momentum stocks, when the momentum train kind of stops and turns back the other way, they can be dangerous. I mean, it can be easy to jump in, too quick. I'd watch that fast line if you are playing that game, and once it breaks that 10 period moving average there, you can see, in other words, closes below that, I'd be careful. All right, Neo Long from Christopher. Very similar to what we just looked at, is another stock, that's had an incredible move. Breaking out, this is a key level right here that it broke through. That would be an area I watched on a pullback. If it came back and tested, this was resistance, now it's support. Once again, look at the action on this 10 period moving average, guys. It has not even traded below it, just keeps bouncing off of it. So that's your bogey right there. Once again, if you get a break below 12 and it breaks that 10 period moving average, all bets are off. It looks like this is potentially, another potential, move higher through that range. But good stock. And some nice looking charts on both of those. All right, guys, we only have a few minutes left. You're welcome, Christopher. I'm going to bring Scott back in. You guys hang on. I know Scott always has a code for you guys. So, Scott, if you want to come back in and walk them out.
Sure, thank you. Before we end, there is a book that's very applicable to today's market. Go ahead and go to trade-ideas.com/ebook and get 5 ways to win in a post-BTFD market. We're no longer in a bull market that we've been in for so long. It's time to get some other strategies so that you can continue to catch alpha. It's free. Just plug your email in on the landing page and then get the email to download. There's going to be a new podcast out this week. Make sure you're subscribed. Search for Trade Ideas Podcast in whatever app you use to listen to podcasts in. And you'll get the last episode. You'll be ready to get the newest episode. Go ahead and download some of the previous ones and give those a listen as well. There's some good stuff in there. We've had Dave Mabe on recently. He's one of our lead developers, the guy behind the AI and the odds maker tool. Also, Brad Williams has been on a recent one. He's our COO, and he does a lot of our product marketing, the software user interface decision-making kind of stuff. So real good insight there. Good stuff. Just subscribe so you can get the next one and the previous ones. We have a code. It's a discount code that'll save you 15% off your first month or year of Trade Ideas. You can also use that on your first month or year of an upgrade to premium if you're a standard subscriber and want to get into using the AI and the backtester and all that neat stuff. Just use hot savings, all caps, this month. And thank you for attending. We'll have a recording of this up later on tonight or tomorrow, so keep an eye out in your email for a reminder tomorrow about how to find that playlist. Also, email us any questions to info@trade-ideas.com and follow Jamie Hodge on Twitter @QuantBot. Steve Gomez is at Today Trader on Twitter. Dan Merkin's at Trade Ideas 1. We got @Trade Ideas and a bunch of other handles. Just find them all, like Pokemon. Facebook.com/Trade Ideas Pro is where you go to like our page on Facebook so that you can share everything we post with all your friends. Make us happy. Thanks, everyone. We'll see you next week. If you're going to attend the Friday webinar, you get an invite a little bit later on this afternoon. Thanks, all. See you next time.
Thanks, everybody.